All right, welcome back, everybody, to another episode of Making Sense. Today, I have a unique guest who you might not expect to join a consumer-focused podcast like this. So, here is my friend Adam Draper. Adam, you are out in San Francisco currently. Is that right?
I am, or Bay Area. Like I'm in the Bay Area.
Bay Area.
Yeah,
Excuse me. Of course, no.
yeah.
That's I can't say it. Well, actually, yeah, Palo Alto. Because I remember
But
because the first time we met, you drove like an hour to come meet us or something.
yeah,
That was
the
really nice of you.
Boost VC offices are in San Mateo, and that's where I
Okay.
broadly am. Obviously, I'm at
Okay.
home right now. This would be a dope office to
Yeah.
have, though. I have tons of comic books back here. It's great.
I think I remember you talking about you've been collecting them for like years, right?
Yeah, no, it's an unhealthy habit of
How
mine.
many
It's
comic books do you own?
Oh, well, that's in the so first off, there's
Thousands, hundreds?
there are two types. So this actually leads into like probably why I like consumers, but like the I have thousands, but there is reading and there's collecting. I happen to be in both buckets,
Okay.
and and it's probably more painful for me on the collecting side because just financially. But I cornered the market on a very specific comic, Invincible #1,
What's
and
that?
it's they have a show on Amazon Prime. Actually, it's like the #1 show whenever it comes out. It's a cartoon. Well, it's a very bloody cartoon. Don't watch it with your kids.
Oh, okay.
And
Well, I don't have
it's
kids.
fantastic. It's my favorite comic book. And then it's kind of like an anti-DC like comic book world sort
Okay.
of thing. And then and then I grew up on Spider-Man and stuff. So
Yeah,
big fan
yeah.
of comic books.
No, it's cool. So give us like the lowdown on who is Adam Draper, what is Boost? Specifically, I think it's interesting just to touch on like sort of like the typical Boost is an investment accelerator, I believe. So, um,
Yeah.
consumer stuff is not Boost's bread and butter. Is that right?
Definitely not
It's
Boost
like
bread
deep
and
tech
butter.
stuff.
Yeah, we do what we call deep tech. We kind of help define deep tech historically. That's like a 24-month-old word, deep tech, and I think
Okay.
people broadly have a concept of whatever that means. First, I want to say thank you. Thanks for inviting me on, Drew. Yeah, we've been sort of talking about the Allbirds thing for a little while, and I've been tracking Iris and your career. I think it's awesome. Um,
Thank you. Appreciate you joining us.
we met for Mad Rabbit, and I just love what you're working on. The So what's typical? So Boost VC, which this is our logo, we are pre-seed investor. So we write $500,000 checks. We try to be the first check. We try to be a first partner to early stage startups. And we try to be a huge champion with enthusiasm as we can. I started my career about 13 years ago, and I just had an affinity in what led us to the weird things.
Mhm.
When I was a seed investor, which is definitely something I'll probably talk about a little bit on this, just because it was
Yep.
before I was an institution that was focused on deep tech. I invested in about 20 deals as an angel.
Which I
Uh,
think may have included Coinbase.
yeah, I actually had a couple dingers. One was so Coinbase. Coinbase was a big deal, huge deal, and it also led to our obsession with sort of the crypto ecosystem,
Yeah,
which I
which
doubled
probably did
down
okay
on,
too. Yeah.
which was not bad. And then Benchling, which is sort of it's software for
Okay.
biotech companies, and then um, Amplitude, which is like mobile backend software for data analytics for enterprises, is publicly listed now. And then there's a company called Wave Mobile Money that's essentially a mobile money product in Africa that's done insanely well,
Yeah.
and then also Bitcoin. So I was sort of an angel in 2010, 2011, 2012, where it honestly, it was a good vintage year. It's like I think
Yeah.
that
Yeah.
these things come in waves, and if you were looking at the counterintuitive things, you would have done very well. My consumer investment, I've actually done fairly well. I'm an investor. One of my best friends started a company called Owens, which is mixers, and he sort of came out of Sir Kensington's, which was also one of my good friends who started it was a ketchup company. If you've ever heard of Sir Kensington's.
Scott. So I just finished recording with Scott 10 minutes ago. So he's
No,
gonna
you
be.
didn't.
Yeah, yeah,
We
yeah.
should have done it together. That would have been great.
That would
The
have been great. Ray, what did he tell me to ask at what oh so we'll get into the Allbirds thing in a second, but Scott's advice for you on Allbirds is to get them to do to hire some Italian person as a creative director.
Oh,
So
dude, that'd be super interesting. Like,
use like Laurel Piano, all these like wool Italian. But like
dude, that I love that.
we don't
Uh,
know we don't know yet about the Allbirds thing. We haven't gotten there. So sorry. Keep going, keep
oh,
going.
dude, but Scott's like, what? Okay, first off, Scott may be the most brilliant creative mind on the planet Earth,
Oh, he's the
and
best.
if you go into an industry where you're competing against like Heinz, like you're competing against
Yeah.
ketchup, like
You're a psycho.
you're psycho, but you also have to be like, you're selling a commodity. This is a similar business, right? Like where you're selling a commodity. I've talked to
Yeah.
Scott about this Allbirds thing. So I also invested in a company called This Is L, which was originally selling actually woman named Talia Frankel, which was selling condoms, and it
Oh.
was the Tom Shoe model of condoms. So they would
Oh.
donate, but eventually it leveled up to being the fastest growing brand for feminine care. Um, the condom slogan when she was in my office, she was like, "Yeah, you give a." I thought that was literally the funniest thing anyone's ever said in my office. So
That's
I
so funny.
invested. And then I've done, and then I'm on the board of the company that owns the rights to The Walking Dead and Invincible, which I've already mentioned, the
Oh,
comic book.
sweet.
And so consumer, I love when people interact with the end consumer because it's like
Mhm.
that's how the world functions, right? And
Yeah.
so I've always had sort of an obsession with brands. My brother is much more understanding of this world. However, and I always pick his brain on how everything works.
Mhm.
In fact, he would be great to have on the show at some point. But
I'd love to.
yeah, so that I have a background in consumer. I've done a couple consumer things that have succeeded. I've done a couple consumer things that haven't succeeded.
Yeah.
And then, but my primary has for what Boost VC was, I just always had an affinity for taking a chance that no one else was willing to take, which was normally
Yeah.
on technology risk or like regulatory risk, and that led me to crypto, aerospace, currently really focused on sort of biotech, tech bio.
Mm.
And so, but I'm really excited to talk about Allbirds because in the last 6 months, that was a really big decision for me. And so
Yeah.
I would love to just sort of discuss what
So
that
let's
process was.
so let's tee that up. So, if you're listening to this, you obviously probably know that I spend an inordinate amount of time in SEC filings for consumer brand companies. So my chief of staff Ray and I have like the Allbirds financials that I do like a quarterly update on or something, and
I
like
know, that's one of the reasons that I think reconnected us. Like you basically like kept doing this, and I already followed you, and I was like, oh, is he like following what I'm following? Like,
well,
is he?
like a year ago you DM me and you were like, should we do this? And I was like, I mean, I don't have $80 million, and you were like, but could you run it? And I was like, yeah, and then you didn't reply. So I'll take like a tiny bit of credit maybe for this. But anyway, so Ray and I are like doing our like quarterly update or something. We're like on FactSet, and we see like this huge block of shares that got bought in Allbirds, like something like over like 5%. And I'm like, oh, that's weird. Like who just it's like some individual. It's called Ghost Angel LLC. And so I'm like, that sounds pretty sick. So I should probably look that up. So I like look up, and I don't know, I don't know where.
Dude, you did real journalism here
That's what
because
I'm
yeah.
saying. That's what I'm saying. This is breaking news. Adam Draper, biggest individual shareholder,
Mhm.
I think so, of Allbirds. And so I see, so Ray's like looking up Ghost Angel LLC, and he's like, it's this guy Adam Draper, and I was like, you have to be kidding me. No way. I instantly DM Adam, and I'm like, dude, you did not.
I Dude,
And so,
that was funny.
oh my god, it was
That's amazing from your perspective. I really appreciate that story
like,
also because you're
have you?
tracking it.
Does
Like,
anybody know this though? Like, I don't know if anybody like knows this yet.
well, oh, dude, I didn't want to trigger the filing thing. And so, to be fair, I actually wanted to buy under the threshold, but it turns out that um, what ends up so for anyone else who thinks about buying a certain percentage of a company, you have to actually file if you buy more than 5% of the liquid publicly traded shares,
The
which is
float. Yeah.
different than like there's normally two classes of shares, and so like common essentially,
Yep.
and I I was trying to buy under the 5% threshold so that I wouldn't have to file. But it
Yeah.
turned out I ended up triggering it because I owned 5% of the liquid common. And so when I had to file I was so mad, but hey, it's out there. Like, it's public information. I'm not, like,
Yeah.
I don't hold back when
Well,
it's
some people
public
are trying to be
information.
low key, so I was pretty excited when you agreed to
Oh,
talk about it.
dude, it was so fun. That was yeah, that was a whole situation. But but leading up to that, so you actually are a part of this story for me, which is, I kept following your information. Okay, let's rewind for a second. So that's sort of like the end almost. Like, I had to file. I was already buying. Like,
Yeah, yeah,
that was
yeah.
almost like three. That was like to buy enough of it. It's an illiquid. It's not very liquid, so you actually need to do little tranches along the
What,
way. Like,
Allbirds?
yeah, like, it's
Huh.
hard to it's hard to buy 5% of anything because, like, you can move the market a lot.
Yeah, yeah.
Um, and so but okay, before I had to make a decision to invest, right? Like, and so I actually think that that's probably the more interesting rather than me actually
Well, let's start
owning.
there.
Let's start there.
Well, actually,
Um,
let's start. Quick question: how do you like? Does somebody like knock on your door and say like, "Yo, like you need to file this thing," or like, how do you even know that's that happen?
yeah, dude. Okay. Normally, if you have a great lawyer, they'll just tell you like what you're supposed to do. I have a friend who is a lawyer, and he mentioned this in passing, and I was like, "Wait, how does that work?" And he said, "Oh, it's actually for 5% of publicly listed, not like Elon got in trouble because when he was buying Twitter, he actually triggered the alarm. He didn't file the 5%. He thought it was only 10%." And so it was like, it's about commonly traded, not otherwise. And so,
And what's like the legal reason? I guess like just so
um,
that you don't. I don't.
I'm guessing they created it in the 1980s for when people were hostile takeovering, like
Yeah,
LBOs, hostile takeovers. Like,
I need to get
that would be
somebody on
my
the show
guess.
that was doing that. That's the good stuff.
Yeah, that would be my guess. I'm literally that's full guessing,
Yeah,
but I think
that
that
makes sense.
you create rules based off of like things that got carried away, and I think
Yeah.
80s to 90s was sort of that like perfect LBO phase. Um, okay, so first off, Allbirds is a shoe company, so I should probably like say
Yes.
what Allbirds is. And in the venture world, I think everyone in venture capital has a romanticized idea of what Allbirds is, and it's the entrepreneurs, the investors, and what started the idea of them was if you go back, you can watch Tim, the founder of Allbirds, in a really sort of almost funny video where it's their Kickstarter, and it's them fundraising for like, I don't know, $100,000 or something, to be able to fundraise for the first shoe, which was this comfortable, beautiful, simple shoe.
Wool.
Um,
Yeah.
wool, and that was so Allbirds is that in the industry. What Allbirds is known for is the wool. So
Mhm.
they and the entire market now uses that wool. And so like that is no longer a defensible
Right.
thing,
Right.
right? Like the whole industry uses this material that they innovated. But I think in the market. So also, I just want to say state of the world at this point, which was about 2 years ago when I started to look at Allbirds, was
Hmm.
just like, like everything was down 90%. Like,
Yeah. Yeah.
what did we learn from that phase of time from 2022 to 2023 and a half was like everything can continue to go down 80%, right? Like, you can always lose 80% more money.
Oh, it
Um,
was the bottom. Yeah.
and it was basically the bottom, and I was looking around and I was like, "Oh, well, my job as an investor, which gets into whether it's consumer or deep tech or whatever, is
Yeah.
identifying where there's value. So, like, where is there value that people haven't, like, realized yet?"
Hmm.
And I was like, interest rates are really high. Like, what gets hit from all of this stuff the worst? Yeah, tariffs, whatever the thing was. And I was like, consumer at the end of the day is probably struggling the most. It's like real
In the
estate,
gutter.
consumer in the gutter. And I was like, oh, well, I'll look around at a couple brands, see what's going on there. There were a couple that were actually still trading pretty high. I was like, oh man, how do they even do this? Like, and every once in a while, it's kind of like real estate shopping, I'd say, for some people who are on Zillow who are trying to like think about finding a countryside home or whatever.
Yeah.
I do that with brands where it's like, dude, I thought about like, could you own, I like playing tennis, and I'm like, dude, Dunlop. Like, could you own Dunlop or like one of these older brands like
Yeah.
Dunay or whatever and rejigger it and like rebring it? And I think there's always I'm talking about it as like romanticism almost of like this idea of doing it. And I think a part of this Allbirds purchase is there's this idea of doing it, there's the reality of doing it, and then there's the future potential of this investment. And
Right.
and so what do you do when you're thinking about doing it? So then I looked at Allbirds and I thought, my rationalization, you followed the S1 filing. What's their revenue right now? Or like in the last year,
So
like what?
their revenue when they IPO'd was about $80 million a quarter or so.
Yeah.
And now it's about, I didn't update second quarter, but it's about 30
Yeah.
million a
And
quarter.
they raised like $400 million on their IPO.
Yeah.
And so the thing that I thought about was like, okay, picture an entrepreneur walking into my office and saying, hey, we're doing $50 million a quarter. But like, that was about what it was at the time. Um, and, okay, well, this is interesting. That isn't really what we do. And then,
Yeah.
and we're valued at $30 million.
And by the way, and so what I kept saying was there was no debt.
And
It's
there's
not
no
like they
debt.
had
And
it's
there's
not
no
like they
debt.
had like 100 million, like Chubby's solo stuff, like solo brands. Like that thing is crushed because they have $200 million of debt. Like you can't touch it.
You can't touch the debt, especially in high interest rate environments. But Allbirds, no debt.
It
And I
was
was
free.
like, okay, well,
Actually, it's actually negative debt, negative net debt.
yeah, and the one thing that they've stayed away from is the debt, although they have a line of credit, and there is,
That's new though. That's
they're
new.
probably going to think about doing something with that. I don't know, but I'd like you
Yeah.
get it so that you have
Right.
the
Right.
option of not running out of money. Um, and I, and so I was like, oh man, that like 30-40 million dollars for a company that's doing 50 million in revenue a quarter is like gotta be a steal. And I don't know that much about consumer, but I was looking across at a lot of things. I was just like, if a startup was in my office pitching this, I would have to do the deal probably. Like I would have
Yeah.
to do
Yeah.
this deal.
Yeah. Your LPs are gonna sue you.
Yeah, I'm like, I would have to do this deal. And so I was looking at it kind of personally and professionally. I was like, if I'm willing to take the risk, maybe I'll bring Boost VC in eventually. And
Yeah.
but it's still like venture funds aren't supposed to buy public stocks. Like that's not really a
No.
thing. And
Right.
so, no, or you're not supposed to. It doesn't mean you don't do it, but like you're not supposed to. It's not
Are
really
you
in the
allowed
system.
to?
So this gets into nuanced finance stuff, but
Okay.
basically up to 20%. So a venture
Oh,
capital structure,
like
uh,
the ERA, IRA thing.
it's
Yeah.
defined by where you are actually helping start small businesses. That was why it was created, the carve
Okay.
out. And so 80% of any venture capital fund has to have
Primary.
into primary, which is
Yeah.
like helping a startup small business. This is something that people are trying to change the rule on because secondaries have become such a big part of our world.
And it's
Um,
so weird with like QSBS and stuff. Like it makes it.
like, dude, it's a wild world. So
Yeah.
20% can be liquid. We run into it at Boost VC because we like buying like Bitcoin. Like that's a
Yeah.
thing.
Yeah.
And so we run into it in crypto. We've run into it for secondaries. We've run into it we've thought about publics, so Allbirds
Yeah.
included.
Yeah.
And so great question though. So the whole carve out of venture is for this like primary, and I think that logically makes sense though. Like, hey, we want to be able to help. America wants
Yeah.
to help jumpstart startups.
If you're doing
Um,
secondary stuff, you're like, yeah,
you
you're
you
doing different.
you're just transacting. You're not really
Yeah.
having the relationship. You're not helping start much.
Yeah.
And
Yeah.
and so I was looking, and when I start to look at it, I'm like, hey, this has to be undervalued, right? Like, I don't know, maybe not. And so I think sometimes when you're a shareholder, you start to look at it a little differently. So I bought a little, and the and and so I bought a little of Allbirds, skin in the game, and you start to watch it a
Mhm.
little closer. You start to, and the price just kept dropping. It went from like, I think it was at 80 million, and then it dropped down to like 30 million. I was like, oh my gosh, like
I have this, yeah, so I have this, it's like this, I think it's like Mean Girls. It's like the Get In Loser, we're going shopping, but I like photoshopped like we're buying Allbirds for 50, or it was like 80 all the way down to like 55, and I like had to strike out the
you keep
right, we got,
crossing it.
yeah, we gotta throw it up on the screen. It's hilarious. I tweeted it like like 4 different times because I was like, "All right, well, we can do it at 80, and now it's 50." Okay, so what, you're in at like 50 or something?
Averaged in probably around because I definitely bought it like 80 for some, but I'm probably averaged in around 45, 40, something like that. So about where it
Yeah,
is
I mean, it
today.
was,
I'm like I'd say I'm about where it was today. The But I think sometimes when you're a shareholder, you don't think that you can like do the things I did, but anyone can do the things I did, which is I started to research the leadership like heavily. And so
mhm,
and like the guy who took over as CEO, his name's Joe Vernacchio. I
yep.
think I'm pronounced that correctly.
Former like North Face guy, is that right?
It was North Face and a boot. There's a really good boot company that he like helped
Okay,
sort of restart. And what was the other one? And then he was at Nike. He was originally at Nike. And
okay. Yeah, so like apparel veteran.
yeah, he's a vet. He was, I think, on the board as an observer or like an advisor of some kind anyway. And and I think, by the way, Allbirds, when they fundraised, th- I think the reality expectation was like, hey, Allbirds is a tech company, but Allbirds was a shoe company, and like that reality hit the public market, and that I think we overcorrected on the public market, and that's why this
Yeah.
opportunity existed. And so what also happened was they raised $400 million, and a lot of founders, when you raise $400 million, you like want to still be in growth mode. But in 2022, the reality of the situation was like you were going to run out of money. No, there weren't going to be more
Yeah,
fundraises,
yeah.
and that was a hard thing for tons of founders, like all the founders. To have that realization, we were having trouble. Like we called it early because we do so many deals at Boost that like we can kind of see when things are freezing up, and things froze. It was like, hey, 1 month, $100 million went into our portfolio. The next month, zero. The next month,
Mhm.
zero. The next month, zero. And maybe negative. And like, we were like, so we email our entire portfolio. We're like, don't do this. Don't do anything. Don't spend money. Hold your money, like whatever you raised,
Yeah.
great, but like hold your money. And I think that just what happens is you become a little undisciplined because you're still in growth mode. And like that's
Mhm.
a hard thing. And Allbirds was always in growth mode. And so they had never been in like disciplined
Yeah.
momentary mode. Um and so Joe took over, and I think that like Joe I reached out, and to their credit, and I think I got connected to Joey through Scott Norton, actually. So I think Scott plays
Oh,
another
really?
role. Or he reached out for me, but I got in through someone else. I forget how that ended up working. But
Mhm.
Joey Z, the founder, and Tim, um, I mean, reached out. I talked to Joey, and I was like, "Oh, that guy's fantastic. He's high energy. He's fantastic." He's sort of on the chairman side of the board, not operating right now, but
Sure.
he's still very, very deeply involved. And then I reach out, and Joe Vernacchio, they hadn't actually communicated about me. I reached out to Joe Vernacchio directly, and I was like, "Hey, I'm a shareholder. I'd love to spend some time with you." And to his credit, he said yes. Like we met up at his office,
This is
and,
before, though,
and
you have the 5%.
yeah, I think I had just done it. So I had just done a
Okay.
majority of it. So I was able to actually sort of have some, hey, I've bought some.
Yeah.
I don't think I had figured out how much, but
Is
I
that
bought
like
a
a
fair
is that
amount.
like a is that like a "Will you meet with me?" or is that like a, "Hey,
It was a
man, I
little,
own 5%."
I mean, it was a little, it was like, hey, will you meet with me? But I don't think I even said how much. And then in the meeting, I sort of mentioned how much, and he was like, oh, like surprise. And and he's a great level-headed, steady builder.
Yeah.
And like, I was like, okay. And he's like, hey, we launched too much stuff, too many retails, too many. And so one of the bad things that has happened for them, but obviously I did the investment, so I am very excited about Allbirds. However, the one thing that is they have is a bunch of these contracts for retail stores, and their
Mhm.
goal was to do like 300 retail stores in a year or something. It was like just bonkers, like crazy. And doing all those deals ends up having just down pipeline expenses
Yeah.
and costs and stuff. So that's one of the things that I think is the reason that Allbirds overall has been suppressed in price, is like they have all these legacy deals that happened on the retail side, and they tried to open too many. Um, but then also Joe, he walked me through the factory, showed me the new stuff. As a shareholder, I was like, oh man, this guy's great. Like, this is
Yeah,
fantastic.
yeah.
Like, hey, thank you. Like, thanks for taking the time. I just randomly kind of showed up and you like spent the time as the CEO of this great company. Um, and again, one of the things that holds you in there, like as a wanting to do the deal, is like, I think that the reason that Allbirds took off was they knew who their customer was, and they figured out how to like own a very specific subset of people who are doing things. I
Mhm.
still think, I still think that they could be the Nike of doing stuff, and like of like people who
Oh,
build
wow.
great things. And that was my pitch. My pitch to them was like, create sponsorship deals with entrepreneurs. Like, do like go out, and that
Whoa.
was my pitch. My pitch was 100% like, go to Brian Armstrong, go to these other founders, and just be like, hey, we will
Oh, I don't hate it.
customize
Yeah, that
a
actually yeah,
shoe for
yeah.
you. Like, I'm assuming like the thought leaders of today are these, Fortune, what, not Fortune, like tech CEOs who are changing the world, right? If you got a shoe deal with Palmer Luckey, if you got a shoe deal with, like, I want someone to do this because I think it'd be awesome, right?
Yeah, yeah,
And
yeah.
I secretly I was kind of like, hey, could I also have like a lower level shoe deal? Like,
Yeah,
could I
yeah.
get like an orange shoe that you
Yeah,
like
yeah.
make for me? But like, hey, like I don't, I'll pay for them, but like, can
If
we
you
say there's a
if you own
sponsorship?
5%, I feel like they could roll out like an Adam Draper collab,
Yeah,
right?
a little bit.
Yeah.
And and so and so that was honestly, that was kind of in my soul, the pitch that I was pitching them. And I was just like, hey, you have an opportunity here. You've kind of tried to do what everyone else is doing. If you're peeling back and focusing, like, find your niche and own it. And I
Well,
just feel like these people define how the world works now.
it's worth noting that, like, you are in, like, you know well, I don't want I don't these Bay Area people are so particular about their geography. I was gonna
No,
say Silicon
I'm in
Valley.
the Bay Area. I'm in the Bay Area. Yeah.
Whatever, you're okay, fine, you're in the Bay Area. Like, that's kinda where this, like, gained popularity in the first place, right? I mean, like, it was hilariously, like, the VC's
They
thing, and then, like, eventually it kinda came over to
Dude, it was Patagonia. You're wearing a Patagonia vests and Allbirds
Allbirds.
sneakers.
Yeah, yeah.
That was the uniform. Like, I
Is that
never.
what you were wearing? Were you part of that, like, early adopter
No,
curve?
I wasn't, but I was jealous that that these people were investing in something that we could all wear. Like, I I'm I'm an investor in, like, if this works in 15 years, someone might know about it, right? Like a
Yeah, yeah.
nuclear reactor or a space, vision thing. And like, I'm like, oh my God, these guys have figured it out. Like, they're investing
Yeah,
and
yeah.
it's fast growing, and like there's definitely an opportunity to take over Nike, whatever. And I think that that was a big part of my decision making also, was just like, hey, like, let's see what we could do. Like, I okay, I am biased, but I do, in my career, I have seen Silicon Valley start to create the meme of society stuff. Like, tech is it's almost a sport, or a, like, it's its own
Yeah, it's like a yeah,
thing, but
culturally,
it's a cult. It's like a cult thing now, and I think that you could build a big enough shoe brand. The problem is there 50 million bucks a quarter you can sell to that market? I think so, but I don't know.
yeah, yeah. Okay, so the stop so you I've if I read the filing right, you filed this in, like, May, April?
That's probably right. Yeah, yeah, yeah.
And so
I had to slowly acquire it. It doesn't just like go. Like, it's not yeah.
yeah, but, like, you filed it in, like, Q2.
Yeah. When I triggered it, I filed it. I was not gonna play the legal runaway game.
Yeah. And I didn't realize that it was kind of back to where it was, but at one point, you were, like, looking pretty good there. It was like it had, like, doubled.
Yeah, no, a little more than double probably. And And I think it was there. Okay, there's how healthy the company is, and then uh,
The
the
stock price, yeah.
the stock price, right? And I think that the I think the company's in a good, healthy position. I think that they need to. I mean, if I'm encouraging them publicly to do anything, it's just like cut costs,
That we can get to that in yeah, I mean, there's
like
yeah.
be okay with cutting revenue by like 50% and like
This is
cut
what I
all
keep
your
this is what I've been
costs.
saying, yeah, this is what I've been saying.
And just
Like,
be profitable. Like that's my thing. They have it's ingrained in them not to. And so if I were to encourage them publicly to do one thing, that would probably be my one thing.
well,
Um,
so, like, this is the thing about Allbirds, that I don't think anybody understands, which is, like, how do you have that much overhead? And I don't know if it's, like, an accounting thing, where, like, they have, like, some costs, some, like, gross margin costs, with Gap and, like, being public in, like, this, like, SG&A line,
dude.
but it's
Oh,
like
the other thing is we like we should take it private. Like,
yes, that's
dude,
what I've been saying.
it costs. I don't know them specifically, but I don't know their
5 or
number. But
5 or
the
10 million
number
bucks?
of accountants, financial people,
Yeah,
and the actual regulatory filings and upkeep. Also, the distraction of being public
yeah,
is like a huge distraction. Like the fact that we get to talk about the stock price and they'll like look it up every day probably is
yeah.
like a huge problem. And it costs 10 million bucks a year to stay listed. So
So, 10,000,000?
yeah, it's like between 5 and 15 on every company,
Okay,
but
so
like
their
10
their
million.
total the total SG&A line here, and I'm looking at 1Q 24 just because like, it was 100% of their sales. It's now 80% or so, and it's 25,000,000. So if you could shave 10 you're talking about, like, cutting it in half.
It's literally it's like you would have to lay people off, like, that's not and I think that's a hard thing for people to do is, like but they've already had to shave, like, they've had to cut a bunch of stuff.
Yeah.
Um, but I literally you look, even if it's not, like, all 10,000,000 goes away, you take it down to, like, 8,000,000, like, great. Hey, we're not burning 20,000,000 bucks how much are they burning every year now? It was like 80 2 years ago, and now it's
Yeah.
40, 30,
I mean,
something like
yeah,
that.
I mean, in 1Q 25, I mean, the net income burn is 22,000,000. But, like, so here's the thing in D2C, right? In D2C, which, like, they're shifting away from that, but, like, in D2C, it's all about, like, MER, like, ROAS, right? Like, spend this much, get this much. Like, their MER is, like, 3, 4, 5. It's like it's plenty healthy. Like, that's not the problem. And so, like, they're generating enough, like, contribution margin to, like, probably make money. But then they have 100% of their revenue and everything under, like, the ads. And so, like, when I kept this is what I kept saying about them, and I was like, "I don't know if I'm, like, missing something here, but if you just, like, bought this thing, stripped out, like, I mean, usually I would expect to see in, like, a D2C dominant company, like, 10% of their, like, revenue in, like, fixed expenses, 15 maybe, like, at the high end,
Yeah.
and they have 100, they have, 100, 80, 79, like, it's, uh,
It
so
it's like a fascinating I truly believe you and I are looking at the same thing and thinking like, "This is weird."
well,
Like
that's the thing, 'cause I was like, "Look, like, it feels obvious unless I'm missing. I have to be missing something because
You're you're not so I believe so I'm a holder of Allbirds, like, I'm very excited about the upside of Allbirds.
everything that we're talking about is upside.
It's all upside. I would say the thing that's holding them back is also what we're talking about, which is, I think it ends up being a governance problem, so it's like, there's this perspective of what the stockholder wants, and what the customer wants, and then
Mhm.
what the management team wants, and I don't think everyone's aligned right now. I don't think that, like, what the stockholder wants, and I think by taking it private, you you focus on the customer. Like, I literally think that it ends
Yeah.
up just being like, "Hey, what does the customer want? Let's make the best possible product." They they're, the other part that I was so I had 2 things. One was like, "Hey, be the Nike of
Yeah, yeah.
heroes of entrepreneurship." But the other thing was be bolder with your marketing. Dude, they spent a bunch of money and, I did not on that Stanley Tucci
Like
video.
Tucci.
Dude, my biggest you wanna know, like, my biggest gripe with that was, I I did hear how much they spent on it, and I was like, "Oh my gosh, this is it." My biggest gripe, though, if you're gonna do it, is show the shoes. There were no shoes in the entire video.
I
Like,
didn't see it.
dude, show the effing shoe exactly that I mean, that's even
That's another problem.
yeah, but I was like, don't be this subtle, like, whatever. Show us the shoes. Like, if, do this thing. I was like, someone at the company of Allbirds wants to hang out with Stanley Tucci, and they hacked their way to do it, and, like, that's fantastic. Like, I game recognized game, but it was in my opinion, that was, like, showing that the marketing is not hitting what the Allbirds company needs, and, like, I think they forgot who their customer is
Well,
on that.
yeah, I mean that. Here's one other good reason to take them private is from the first quarter of 2024 to the fourth quarter of 2024, their gross margin went from 47% to 31%. You and it's because they're like pivoting to this like distributor model or whatever, but like
Yeah.
you cannot survive that in the as a public market stock because there's going to be enough people who like either don't care that you're like shifting your revenue mix or just aren't or just don't know. And so like especially in like an apparel category like when that's like a death sentence. So like but you can if you're private like you can perform that transformation over the course of 3 quarters and like nobody's going to care because everybody knows the plan. So like they're
I
in this like weird like turnaround phase that like the
and
stock's
and
not gonna do
and,
well.
at least they do I mean, the thing I'm very excited about is they have a strategy. Hey, whatever I feel about everything, they are executing on an actual strategy rather than, like, lots of strategies. Like, they're
Right.
like, "Hey, cut costs. Hey, figure" like, they're like, "Hey, focus back on comfort of the shoe." Like, there are a couple focused things. Like, they killed off
Okay.
tons of lines of stuff. Like, most of the multiple, like, if you go to their website also, I do think that I made an impact with them because I called them out on that Stanley Tucci video for a lot of stuff, and I was like, "When I land on your website, I'm looking at Stanley Tucci's face, and there are no shoes, and I don't know where I'm supposed to click," and, like, they fixed it within, like, 3 days. They were like I was pretty sure that I hit 'em hard on that. Um, but dude, also, the thing I haven't talked about is I do like their shoes. I love their shoes. I love the product.
They're great.
It's a fantastic product, and they've figured out a lot of like, if I were to start I was also thinking, like, if I were to start a shoe company from the bottom, like, it would cost way more than 30 million bucks or what 40 million bucks that I'm paying, right? Like,
Uh,
it would be just, like, to build the brand that they have built. Like, most people
yeah.
who are
Well,
listening right
yes.
now have bought Allbirds shoes, and it's a lot of people, or
Everybody knows what it
they
is.
know what it is.
Yeah,
Like,
you're right. That's worth way more than 30 million bucks.
it's just
That's a good
they
way that's another good way to think about it. I like the 2 ways that you thought about it are great. I think, like, if this person came into my office today and was pitching me, "What would I do here? And how much is it gonna cost me just to even achieve"
built
yeah, that's cool.
yeah. Also,
Yeah.
I mean, they've spent $1 billion on their brand, right? Like, like, if you think about how much the cost of everything over the course of their 9 years or 8 years is,
Mhm.
it's like $800 million has gone into this brand, and they were good at the brand building. It wasn't they were that
And it's a
if
good brand. And they've had
fantastic.
they're closing all these stores, but they've had them up everywhere forever. Like, everybody's seen it. Everybody's, like, gone into it. Yeah,
But,
see,
like,
like,
if
these
you
are
if you went to Allbirds and you saw, like, founders as the pictures instead of these random people who are representative of the demographics that they think they're selling to, I I think that you would I would have exponentially higher and I think founders would do it for the fun, not for the money. Like, you get a couple of
it's like a
series
shoe deal. Yeah,
it's
it's
a
like getting a
shoe
shoe
deal.
deal.
Dude, I literally like, I'm saying it publicly because I gave these ideas to people, a year ago. If there's another shoe brand that's gonna do this, great. Like, go do it, right? Like,
That's
create
so funny,
sponsorship
yeah.
deals.
It's like the Meta researchers are getting NBA deals, like, why can't why can't they get shoe deals too?
So true.
You know? Yeah.
Yeah, they're oh my gosh. Yeah, they're getting good deals. Yeah, the
Um,
and this is the emergence of, like, tech and culture and, like, all that
yeah,
stuff, and I think if you owned that as a brand and Allbirds had it, they owned it. They owned it, and then they
they did.
lightened up, and they sort of wanted to do what other people were doing because that was the faster way to grow.
Mhm.
You gotta take things back every once in a while. I mean, they sell $45 million worth of shoes a quarter. Like, it's crazy to me
It's a
still.
huge business. Yeah,
It's
it's a
a
huge
huge freaking
business.
business, but they lose money, but like, huge business.
But
I'm
so like if they were losing here's like my thing. If
As
they
we've
were
been
losing
talking, I'm more and more amped on this, by the way. We should take it private, man.
let's
Drew,
do it.
Drew, you and me, let's figure out how to take this thing
We could
private.
yeah, we could this is not a solicitation of securities.
Yeah.
um my thing though, if they were losing money because their marketing spend sucked, then I would be like, okay, this is really hard to get behind. But like I've seen I've seen like these like like these MER ratios of like, you know, bigger companies that are
Way
worse.
worse, way worse.
Way worse. Yeah. Like that's why I'm saying like when you asked me like a year or two ago or whatever, like, could you run this thing? And I was like, yeah, you just gotta show up and fire everybody. Or like, and like whatever. Like and then you're
Half.
good.
You have to fire
Sure, half. Yeah.
half, but there's an easy. But I mean, if the the accounting department hears this, they're not going to love this. But like, that's sort of where you cut. Like, that's the
Yes.
$10 million a year is basically going
And like
towards this
maybe
thing.
like we negotiate a little bit more with Stanley Tucci instead of just,
Oh my
needing
god. Fucking yeah. I mean, hey, game recognized game again. Like, I think that it was a situation where the person at Allbirds who wanted to hang out with Stanley Tucci got to hang out with Stanley Tucci, and then I think Stanley Tucci got paid a bunch of money. And like, great.
win-win.
It was a
Yeah.
win-win, but it was not a win for Allbirds, I don't think, because us saying this, no one listening knew that those videos existed. It was like absolute not. It wasn't. It was directionally correct. I've heard about a few people trying to start but like grassroots TV show series on a quick
Okay.
clip concept.
Oh, like
for
Quibi?
it's Quibi, but for God, who's doing it? It's there's someone who's like it's a payments company and they haven't even talked about the brand yet. It's in the show, but they're going to. It's a little like
Okay.
but I think Allbirds needs to be like hitting people in the face with the brand. Like I don't think people are subtle. People are always like, "Oh, it's but the art or whatever." Like I think to be the best brand in the world, you have to hit people in the face with it, and you need to be like, "This is who we are." And like I have yet to find a brand that wasn't just crushing people in the face with the brand that won. Like,
Yeah.
don't be nuanced. Like there's no nuance in branding.
So I've got like one or two more questions maybe before we wrap here, but I'm curious because I think you came in here at a pretty good time, but turnarounds don't always work out. So like,
Like
how long are you gonna
like
wait?
like we said at the beginning, everything can always go down to 80%, right?
Yeah.
Um, you know, I think there's how long? I am a long-term investor. I will admit I sold a little bit. And it was more just
It's
like
up 2x in 2 months. What are you gonna
yeah,
do?
I was gonna sell a little bit. The I would like I think what I need to see is the momentum shifting, where it's like not only this stock price, but I'll ignore the stock price. I just want to see like, and I feel that there are a couple things they can start to point to that where they're creating and building momentum, where they've launched these new products. The shoes are really beautiful. I think that
Mhm.
for me, it's less of how long and more like, hey, show me some momentum on the product, on the business. Shows that you can do another harsh cut, probably. Like that would be really, really great. Um, otherwise, I do think that this concept where it's like, hey, like you don't need to buy them all out. Like you could buy all the tradable stock for half, right? Like you could probably buy
Is that is
51%.
that is it half and half?
Um, I forget what the numbers were.
Who owns the other half? Is it
Well, it's like the different so there's A's and there's B's, and the B's are the sort of the things that are being traded, and the A's are like voting shares. So management, founders, and board members, I think, have sort of like
so
that.
it's probably less than half then.
Yeah, it's less than half. It's probably like, but I'm just thinking on a percentage basis, you could probably figure out how to own it. You would have to make. Yeah, there are a lot of different thoughts here, but you would have to make an offer to the management, and you'd have to have shareholders agree, and and that would be difficult, but not impossible, and you could do it at a fair price. I realized that you weren't going to be able to do it at the lowest possible price, You would have to do it in like some sort of compromising area of like exiting. But
Yeah.
dude, if I was a brand though, I like if I were okay, I'm like On or I'm Nike or I'm whatever.
Yeah.
Dude, you buy this brand, you probably it's like a no brainer,
Free.
a hostile
For free.
takeover for free.
Yeah.
Like
Yeah.
it's a and so I the but also the founders are fantastic, by the way. I haven't met Tim actually. Joey is fantastic, and Joe Vernacchio is the right guy to steady the ship.
Okay.
I think they do need an extreme marketer. Like they need someone who's going to be very bold and try stuff. Like I just think that they're still trying to fit into a nuance, and if they want to get back to, and you are also saying like the marketing spend versus the like it's actually not that bad, the ratio of like success. I just think that
It's not good, to be
they're
clear.
not
Like, it's not like
growing,
great.
but
Yeah.
it doesn't feel like grow. It's not like people who buy Allbirds are sharing that they're buying Allbirds right now.
Yeah.
Like that the verbal virality. They need one of those where it's verbally viral, and they
Yeah.
need it. They need
And
it.
it's interesting because there's this like phenomenon in apparel specifically where like things like do come back, like Champion, like died forever and then like came back and then died again. But like,
Champion,
it's
God, that did come back. I
yeah,
I
they for a
remember
little
that.
bit, yeah. And like
I
Abercrombie and Fitch
yeah, and
came
I think
back.
that they're spurred by like really capturing a identity in a moment. Like you have to capture an identity of someone where people feel like, oh, I am like what they are trying to be.
Mhm.
And I just think it's very clear that what made Allbirds great was capturing the identity, but then they tried to be like everyone else for a little bit. And now it's like they're so big and it's amazing and they can capture it again. I think that it's like in a perfect spot and it's going to figure itself out and it's going to be
And
great.
you think the opportunity is like Nike sized?
Uh, I mean, my concept was more just like, do I think this is $1 billion business that is being valued at 30 million?
I think a billion's
And
probably not
so
crazy.
my thought is, I always think in terms of, I have a really great friend. Her name is Annie Pearl. She runs like AI for Microsoft and stuff. And
Oh, nice.
but she, in her career, she's taking companies from like 100 million to a billion a lot. And I asked her like, what's the key insight of taking companies from like 50 or 100 to a billion? And she said, what gets you here doesn't get you there. And I think about
Yeah.
that a lot where it's like, I can't make a call on what would get them to like 100 billion or 50 billion.
Yeah, yeah.
But do I think that the size of what they are, what they have is a billion, 2 billion, $3 billion company? 100%. Like
I think yeah.
it's like an easily $100 billion. Easily like $5 billion company if they write a couple things, and like they need to get a little lucky. Like every startup needs to get a little
Of course.
lucky. Like there needs to be a couple things that they're obsessive about. Um, yeah, yeah. I feel like some of this was me just saying the things that were bothering me about it, but like I do really, I wanted to be very brutally honest about it. Like
Yeah.
I went through a very deep. When I'm trying to figure out an investment decision, I want to get to the end of it and like figure out what I feel about it. And like I did everything. I talked to the founders, I talked to the management, I went dark and deep. And
Did
I
you
think
do all of your research like solo?
yeah. This was like I try not to burden my team with my curiosities. And
Can't say.
yeah,
Yeah.
so and that's why it also took a long time. Like I was in the process for it was probably a year of like, oh, that'd be cool. And then, oh, let's listen to some podcasts. And then, oh, and it's sort of a compounding decision where you're like slowly
Mhm.
building and you're like, wait, the price keeps going down. I should be liking that more, right? Like it's a better price, not a worse price.
Yeah. Have
Uh,
you ever done anything like this before?
um, I've never done a like full buy thing. No, I've never bought. Let's see here.
5.
Have I ever done something like this before? I cornered the market on Invincible #1 comic
The comic
books,
books, yes.
which actually is not that different on the
Well,
buying
when you
side.
get cornered the market on that, let's what is it? What does that mean? You own all the Invincible 1 comic books?
Is it behind me? No. I should. over there somewhere. The here, I'll show you an Invincible 1 comic on the way out. Wait, let's see. Oh, I thought that was one. This is the one that broke. This one of our founders sent to the top. So this is Invincible 1 comic, and this is the balloon that it went up to like 30,000 feet in. And then they
Oh,
dropped it. It was a symbolic. It was great. It was a good thing, but it was not. It was nice of them to give it back. But so basically, this is a graded book. So this is like graded means it's in a encased thing, and there a third party called CGC
okay.
grades it a 9.0 or a 9.2 or a 6 or whatever. And so my goal, 10,000 were released in 2003. Which isn't that many comics for a first release. So it was actually not a very
Sure.
popular comic at that time. And then, and I was like, okay, well, assume 60% were like killed, thrown in the trash, whatever, bad quality. How many have been graded? And there were about 1,200 that were graded at the time. And I was like, oh, well, why don't I just buy the 9.0s and above? So I own like I think 12 to 15% of these. But
Of the 10,000?
of the 9.0s and above. So I own like
Oh,
the market closed a lot. So it ended up being and it got honestly it got a little expensive. But then by doing this, I met the board, I met the team, I met the creator, and now I'm on the board. So it's
and now
pretty
you're on
fun.
the board.
So
Yeah,
like
yeah.
I'd say that was the closest where they were very yeah, that's the closest to what I've done like this before, where I had
Okay.
a compounding curiosity.
Yeah,
Um,
yeah.
I this is the first time where I'm like, I feel like there's so much upside, and I think it was a moment in time where they could capture magic again. It's just it's hey, building a company is difficult, and like recreating a brand is hard. Like reminding people is expensive. It's you know, I'm not going to claim to know everything about CGC or consumer, but
Yeah.
I do think that there's an opportunity, and that's why I did it.
Well, we will find out.
We will find out.
Time will tell us.
Well,
And I think
hey, if we figure out how to raise some money from people, maybe you're going to be, running a $200 million a year consumer business, man.
yeah, as long as I can get him an Irish contract, I'm all in.
Yeah, so have you thought? I mean, maybe this is an offline question, but have you thought about being like a private equity fund because that kind of
I
makes
get
sense
that.
for you?
I get that all the time because we have a lot of interesting data that we can harness, right? To
Yeah.
like kind of like benchmark folks and do analysis. I was at a conference and I think just like walking around, I like accidentally raised like $7 million for like the Iris fund. Because people would just like come up to me and I was like, yeah, I don't know, maybe.
Trip fall into some money.
Yeah, like, well, they're like, "We would give it to you." And I was like, "Okay, yeah."
Yeah,
Shout out Evan.
yeah,
Um,
it's a great. I think it's a great idea. I think I'm obsessed with the concept of ownership. Like, I think ownership is sort of a special human thing, and like figuring out how to own pieces of the endeavors that you want to be a part of is kind of that's what led me to Allbirds. Like, it was an
yeah.
endeavor that I thought was interesting and I wanted to be a part of. And then the same with all the companies that we invest in at Boost. Like, it's kind of like, hey, yeah, I want nuclear reactors. That'd be cool. Like,
Alright, well, yours is like a little different. Nuclear reactors and spaceships and
hey, it's either how does what is consumers so interesting because it's like, what do people actually buy, right? Like,
yeah,
what
like, what
does
are they
the end
doing?
user
Yeah.
actually buy, and what do they do with it? And like, there's certain things like shoes that people need all the time, and it's
Yeah.
just a wild, weird world. Um, yeah. I mean, I'm wearing my Allbirds socks right now. I
You should have a T-shirt from there. I It's like one of my favorite T-shirts. I think they stopped selling them.
Yeah, that was one of the things that got cut. I actually loved it too. Sorry, I got one of those shoe t-shirts
Great.
also. They're good material. It was fantastic.
Yeah, totally. Yeah, yeah, yeah.
The the socks, I think they still sell. I'm on
They
the
should sell
website.
socks. I mean, socks and shoes, it's close
Yeah,
enough.
socks and shoes make sense. The other stuff like what else was dude, they've focused. Like if you look at this thing, way more focused than 8 months ago. Like I feel actually pretty good about these decisions that they're making where it's like everything's about shoes, right? Like you're looking at
Yeah.
this and it's like the website is like shoes, shoes. It's a good
Well,
website.
I am not an Allbirds shareholder.
Well,
So,
if I mean, we might be, fundraising
well,
to buy the whole
not yet.
thing.
Yeah, yeah,
After this podcast, we're just gonna do the whole thing.
yeah.
Oh yeah. Hey, you buy at your own risk. I always think being an investor means knowing what risk you're taking, not taking risk. And
Mhm.
like I felt it. It's like a fun opportunity that has a big amount of upside, and that was why I did it. It was like, hey,
Yeah.
is it Nike? I don't know. Is it like a billion, $2 billion business? Yes, like it can be. But there are struggles, and that's why I wanted to focus on those during this, because like there's struggles. There's struggle. It's hard, and we'll see.
It's all yeah.
Stop
All right,
losing
man.
money. Summary.
So yeah, plan of action, hire us so we can just fire everybody, or you just let us take the company private.
Yeah.
So
Well, I think taking a company private immediately saves $10 million a year. So like,
I was thinking it was like 5, but that's
yeah,
crazy.
no, it's more than 5. It's more than 5 a year. And like, obviously it would be expensive to do the process. So like maybe in the first year it's only 5, but it's like,
Yeah.
dude, taking a company private would be a great idea, because and then cutting and being okay with only doing like $100 million a year in business, and
Yes,
like
yes,
making
yes, yes.
20, and
That was
like,
my thing because
yeah,
you can get those MERs to expand if you just downsized it.
it,
So somebody's gonna like listen to this and then do it, and we're not
hopefully
gonna
they
get any of the
call us.
carry.
That's what we're hoping.
Yeah, at least just cut us in a little bit.
Yeah,
Yeah,
like call us. We'll take the risk with you, right? Like hey, this was
yeah.
fun. Thanks for talking to me about this,
Lots of
because
fun, Adam. I
this
appreciate
was a
your
lot
time
of
so
stuff
much,
that's
man.
been locked in my head. Because I every day I'm focused on like building Boost VC, but like I did
Yeah,
do this as an individual, and it did take, a lot of conviction to be able to do it.
yeah, yeah. So before we part here, anything you want to plug or shout out or
Yeah, well, if you're a founder, so one of the things is, you mentioned like, I've looked at consumer things in the past. I love all startups. The thing that I focus on at Boost VC is really finding industries that are overlooked and undervalued. I think consumer is one of them. It can be consumer tech, it could be
yeah,
consumer health, it could be consumer. And the thing I'm really looking at is sort of like consumer health bio right now. I'm trying to find great companies that interact with the end customer in that area. So
yeah.
if anyone's starting anything in that industry, please email me.
Adam
Adam
at
at
boost.vc.
boost.vc.
All right, Adam at boost.vc. You heard it here first. All right, man. Thanks so much for joining. That was a lot of fun. I know you're busy with a ton of stuff, so thanks for making the time.